benefit of being the third speaker of the day is that I can skip quite a large section of this presentation, as a lot of things that I would like to talk about have already been discussed. Well, the different sources or types of crowdfunding, I can leave that. But what is important to notice is that equity crowdfunding and debt crowdfunding are very different animals. So the way I and my colleagues from the Center for Entrepreneurship look at crowdfunding is as a source of financing, alternative or rather complementary to traditional debt lending by banks. And there are quite a lot of financial instruments which can play that role. This table covers most of the financing instruments at the disposal of small businesses and entrepreneurs, ranged along the risk-return spectrum, ranging from asset-based financing options such as leasing and factoring, all the way to the right to high-risk return instruments such as private equity. And debt crowdfunding is relatively to the left side of this table, whereas equity crowdfunding is to the right. That's not just because equity crowdfunding, invests in equity and not in debt. The types of firms that are serviced by these two instruments are very different. By the way, I will focus in this presentation on for-profit organizations providing funding to enterprises or the crowd to enterprises, to for-profit organizations. Equity crowdfunding provides funding at the very early stages of a firm's life to relatively innovative enterprises, such as in the software industry. Whereas debt crowdfunding usually does not provide any funding for startups. It's usually reserved for mature enterprises with a proven track record, with a business model that has proven its worth. So by that nature, debt crowdfunding is relatively low risk, whereas equity crowdfunding belongs to high risk returns instruments such as venture capital investments and business angel investments. And that has implications for regulation. And if the experience from private equity, from venture capitalists, angel investments, has any bearing on crowdfunding, equity crowdfunding, that would probably mean that most investors make negative returns on investments in terms of equity crowdfunding. There is a need for more research on that topic, but in all likelihood, most investors in equity crowdfunding will make negative returns, and that will be compensated by, say, 5 to 10% of investments which are usually successful and which will yield very substantial returns on investments. So that is something to keep in mind. If there's one thing I would like you to take from this presentation, is that different types of crowdfunding are really different. Sure. A lot of things have been said about the benefits for entrepreneurs. One thing which I would like to emphasize is that one important benefit is that it opens other financial opportunities, including bank finance as well. There's a large-scale survey in the United Kingdom which shows that about 2/3 of all entrepreneurs seeking financing from platforms declared that the inability to access other sources of finance is a major reason to do so. And for investors, there is a number of reasons. A major one is TINA. There's an alternative. There's a very low interest rate environment at the moment. So if you want to make some returns on investment, crowdfunding is one of the few options that can deliver. That research shows that that's a huge incentive for investors to actually invest through crowdfunding platforms. Something which has also been mentioned yesterday, this is a relatively efficient tool that can minimize transaction costs, so operating costs are low, overhead costs are low. There are no brick and mortar costs compared to bank financing. And one thing which is especially important for reward-based crowdfunding or donation-based is that you can back local businesses where you care about social causes. So a lot of the reasons why people invest in crowdfunding platforms is not just to make a return on investment, but also because it helps you it helps a company or a cause that you believe in, that you care about. Then trends, I hope this is more or less visible. What I would like to say is that crowdfunding is more or less doubling in size every year in North America, Asia, and Europe. Faster growth is taking place in Asia, where in 2012 crowdfunding volumes were negligible, and in 2015 is expected to surpass $10 billion US. It's overtaking Europe as the second largest market for crowdfunding activities. So in total, as Venkat mentioned, crowdfunding volumes total around 35 billion US expected in 2015. And that sounds like a huge amount of money, but really compared to bank financing, this is still negligible. Just to give an example, Austria, a population of 8.5 million people, bank financing to corporate lending is around twice global crowdfunding volumes, including all donation-based, rewards-based crowdfunding for social charitable causes. So if we talk about financing for entrepreneurs, for small businesses, crowdfunding is emerging, but it's still quite negligible. The vast majority of SMEs have never used any crowdfunding as a financing source. But it is expanding at a very rapid clip, and in a few years' time, the picture might look totally different. This has been covered already. So, given that the previous speaker provided data from the United States and Min Jung talked about Korean developments and trends, I think it might be interesting to focus a little bit on what happens in Europe. And if you look at the European market, what is immediately clear is that crowdfunding activities are really taking place in the United Kingdom and much less in other European countries. So this table represents, well, the use of alternative financing instruments per capita in euro. And a citizen of the United Kingdom invests on average 36 euro, it's expressed in euro for the sake of comparability, in alternative financing instruments, which is mainly crowdfunding. Whereas you see some other figures which are quite high for small European countries, such as Estonia and Sweden. The next large European economy, France, spends less than 1/10 per citizen on crowdfunding. So if you look at other data, for example, on equity investments in particular, you see that much of crowdfunding is taking place in the United Kingdom, and that surpasses to a large extent what happens in other continental European countries. Now we'll go back to this, maybe provide a few potential explanations why the United Kingdom is so much ahead compared to other European countries, because that might have something interesting for Korea or other countries. Now, if you look at emerging developments, one thing that we find is that an increasing share of financing goes to for-profit ventures. Still a lot of crowdfunding investments, slightly more than half of them, go for charitable causes, social causes, artistic causes, but that share is diminishing over time. So more and more money is being directed to businesses, for-profit organizations. The second observation is that the share of donation and rewards-based crowdfunding is falling globally. Equity crowdfunding in particular, it's relatively small compared to debt crowdfunding, but it is increasing especially fast. And a second observation is that crowdfunding is not just limited to the crowd anymore. The term is becoming a little bit misleading. It's not just limited to unsophisticated investors. You see more and more professional investors, business angels, venture capitalists using crowdfunding platforms to find investment opportunities. I learned yesterday that the city of San Francisco is also using crowdfunding as a source of financing. So the city of San Francisco is not the crowd. And there are a lot of examples like that. You see some large charitable organizations launching crowdfunding platforms. You see asset managers, banks, institutional investors such as hedge funds, insurance companies, pension funds, using peer-to-peer lending platforms. So in a way, the market is professionalizing, and you see that big money is more and more coming in. And if I may, that reminds me a little bit of the sharing economy in general, where you see in Airbnb, it's still a minority, but you see some professionals entering the market, buying property and renting it. You see more and more people making a living, a full-time living out of Uber. And you see similar thing going on in the crowdfunding market. It's professionalizing, and it is attracting more and more interest from professional investors. And then I would like to come back on the issue of the UK. There are quite a few reasons why the United Kingdom, why the market for crowdfunding is relatively well developed in the United Kingdom compared to continental European countries. This is quite tentative. Do not ask me to attach a weight to each one of these reasons. Some of them might be up for discussion, but these are some things that we think might be important. The first one is the benefit of incumbency. The first crowdfunding platform was actually launched in the United Kingdom, and others followed soon after. So given that the market is growing so fast, that might have made a huge difference. Second reason is that the United Kingdom is a relatively sophisticated financial market, and there's a culture of risk-taking that is hard to quantify, but what we often hear in Anglo-Saxon countries is there's a willingness for the general population to take risk, to invest in even relatively risky ventures, but that is more absent in continental European countries. So the culture of risk-taking, of being willing to take risks with your money and give it to entrepreneurs, is much more prevalent in the United Kingdom and the United States. That might play a reason. Third, there is a general acceptance of using the internet for retail transactions. E-commerce is relatively big in the United Kingdom. People are used to using the internet to buy products and services. That might also make the step a little bit smaller to use the internet for investing. And if I would go back to this previous table, I haven't done the exercise, but if you would make a correlation between volume of e-commerce as a percentage of GDP or something like that, and crowdfunding activities, I think there's a clear and positive correlation. Many of these countries where crowdfunding volumes are very, very small, for example, Belgium, 0.2 euro per capita. In these countries, generally, e-commerce is relatively small as well. And what we also find in the UK is that bank lending really plummeted in the aftermath of the financial crisis, and that have played a role as well, probably. There are less alternatives in the United Kingdom than in many continental European countries where bank lending expanded even after the financial crisis. So small businesses in the United Kingdom were more or less forced to look for non-bank alternatives, including crowdfunding. And then I will talk a little bit about tax regimes and the regulatory framework in place. And the United Kingdom offers several tax breaks, especially for equity crowdfunding, which might have incentivized investors. Self-regulation seems to have created a lot of trust. We talked a lot about trust yesterday, and trust is a crucial issue also for crowdfunding. And even at the very early stages of crowdfunding in the United Kingdom, there was a lot of self-regulation. There was a lot of information provided by these nascent emerging platforms, and it seems like people from the very beginning trusted these platforms. And the final thing which I would like to mention is that the Financial Regulatory Authority is very supportive of financial innovation. In a lot of countries, it's hard to get the ear of the financial regulator. If you're a small fintech startup, that's not really true in the United Kingdom. You can get a review or hearing from someone working at the Financial Regulatory Authority. If you're a small startup with a few people and you would like to know how your business model fits in with current regulation, you can get their opinion. And they will change the regulatory framework quite often in the United Kingdom. So, which also has some parallels with the sharing economy in general. Financial regulation is generally unfit for crowdfunding activities. It's not really tailored to a lot of people investing small amounts of money, making that pot of money. That's not really well catered for in most regulatory frameworks, but that is the case in the United Kingdom. The regulatory framework has been updated quite often to better fit the needs of crowdfunding platforms. Then some specific support measures. Well, if you're a bank and you made a credit refusal, you're actually obliged to share SME credit data on a specialized platform, which can be consulted by crowdfunders. So it's relatively easy to get information on SME credit data as a crowdfunding platform. You also have to make referral to alternative sources of finance in case of a credit refusal. So you have to more or less publicize the existence of crowdfunding platforms and other alternative financing options as a bank. Second thing, which I talked a little bit about, is there really customized regulation for peer-to-peer lending and equity crowdfunding. It's also a bad debt relief for peer-to-peer investors. So basically, if you lose money on a peer-to-peer lending platform, that can be tax deductible. And there are quite a lot of other tax benefits, such as investments via peer-to-peer count as free retirement savings. So basically, that means that it's treated very favorably by the tax regime. There are also bans on waiver arrangements and deeds of priority. This is relatively technical. Basically, what that means is that if you have securities over assets as a bank or another lender, you're more or less forced to share them with new investors. So if you have a bank loan and then afterwards you seek financing from the crowd investors will have some security. And the British Business Bank, the public financial institution, provides quite a lot of investments themselves in crowdfunding platforms, including co-investment schemes with the crowd. Then more in general, what are the regulatory challenges for both peer-to-peer lending platforms and equity crowdfunding? Well, the first issue is the ability to market to all consumers. In the United States, for example, there are limits to the extent you can publicize and advertise crowdfunding activities. You also see that there are different disclosure requirements, different types of information you're required to provide, such as financial statements and so on. Another thing which differs quite a lot across countries is the amount of money you can invest or the amount of funding that each crowdfunding project can attract. A second challenge is to balance consumer protection rules with allowing for financial innovation. So crowdfunding in general has clear implications for consumer protection, and you have to balance this with allowing firms to attract sources of finance. Then the third aspect is ensuring credit information is widely available. As an investor, you need some information to make sure that you know what type of firm you're investing in. And so the amount of information that is available also differs quite a lot. And the questions are, is there a credit information database? Are the credit scores available? Second, more importantly, is this information available to the crowd and to crowdfunding platforms? And privacy regulations and data protection rules can play a role in this, of not making all information available to all potential investors. And the final thing I would like to say about this is that innovative ways to assess risks might be helpful in this area. For example, if you're a merchant active on Alibaba or Amazon and you have track history of payments, you can use that information, which can serve as a very helpful proxy to an official credit rating by a financial institution. And investors can gauge if it's a viable company, yes or no, based on transaction history of these online merchants. And specific regulatory challenges for equity crowdfunding are the following. So in a lot of countries, there are public offering rules to crowdfunding activities. And these are really designed for very large companies, attracting a lot of money at once. And it carries very high fixed costs, these public offerings of securities. And that model is not really suited for crowdfunding activities, often seeking something like 50,000 US dollars or euros. And the question is if prospectus rules and registration exemption should be what exactly should be the prospectus rules, if they should be, how tight they should be, under what conditions. Just to give one example, in Austria has just passed enacted legislation on equity crowdfunding. There are no issuing requirements for issue volumes below 100,000 euro, between 100,000 and 1.5 million. Those simplified prospectus rules, simplified information requirements, and for prospectuses issuances above that threshold, normal prospectus rules and registration hold true. Another thing is that equity crowdfunding investments are often limited to what you can call sophisticated investors or professionals, which is often defined by net worth or income and so on. So as in the case of Korea, the amount of money you can invest through crowdfunding platforms often varies according to your net income or your net worth. That is true in a lot of countries. And the idea behind this is that professional investors, A, have a better idea of the risks involved. They know that there's a large probability that it will yield negative returns on investment. And B, they can better take the losses. They can absorb the losses if there are any. And then a final point which I would like to mention is that there should be due diligence requirements of the offerings. As Minjung mentioned, there are quite a lot of transactional risks, and these platforms need to screen, to some extent, projects on their platform. And the extent to which they have to do this, they have to do screening, they have to protect against fraud and so on, that is also an important issue. So due diligence requirements also change a lot in one jurisdiction to the other. I think I spent enough time. Thank you very much for your kind attention.